Leipold joins us from Washington, D.C. Thanks for sharing some time on your Sunday evening, Alessandro. So let's talk through some of the headlines that we're getting through these European finance ministers meetings. So it looks like the ECB is not going to boost its balance sheet, and they're looking to revamp a strategy to contain Greece and also outlining plans to aid banks. So what are you hearing? Are you satisfied with what some of these headlines are saying to you?
Well, I think the markets are already expressing a bit of a judgment by the fact that U.S. stocks futures are down and the euro is weakening a little bit. But you have to set that against what was, I think, a pretty incredible run-up last week. I'm not quite sure what got hold of the markets, because they seem to be very optimistic despite attempts by Chancellor Merkel to dampen expectations ahead of the meeting, and the fact that, you know, they announced that it was going to be a two-stage thing. I don't think that tapping the ECB to strengthen the EFSF was ever really on the agenda. That was not going to happen. So I think the fact that this meeting is lasting this long, it's unprecedented. Yeah. It's 5 days of almost uninterrupted meetings, is actually, I would take that as almost a positive sign, if you want. I mean, it can be read in two ways, I realize that. But I take it as a positive sign that the wake-up call has been heard. As you said at the beginning, they realize they cannot underwhelm markets. They realize they have to come up with something on Wednesday within the constraints of what they can actually politically do, and that is some constraint. But there's a greater realism on a number of fronts, and we can go into that if you're interested.
Yeah, I'm very interested, Alessandro, but let's also talk about some of the discussions already between the leaders in Europe. Looks like we have Germany achieving one of its main summit aims, which means that they don't want to really bulk up this rescue fund by leveraging too much further, right, the EFSF. So what are you hearing so far? We don't have anything concrete because, look, they talked about restructuring Greece, right? They don't talk about how much of a haircut that the market needs to take, and we don't even know how much the banks have to be recapitalized by right now. No, we don't know exactly, but I mean the so-called Troika report, the report by the ECB, the IMF, and the EU Commission on Greece leaked the other day, which in itself actually is a pity because these things shouldn't, but it's out there. And it does say that Greece needs a 50 to 60% haircut. And that is one of the things that I was mentioning, a greater realism. I mean, people have known this for a while, but now it's being officially recognized. And that's what they're looking at. They haven't put it in writing yet, but that's definitely what they're looking at. 50 to 60%. I think they're still kidding themselves when they say, oh, but we want it to be voluntary. Well, you don't get 50 to 60% on a voluntary basis. If you look at the history of debt restructurings, all the sort of so-called voluntary or friendly restructurings had haircuts in the area of 20 to 25%. The others and
were
what about the recapitalization, though, Alessandro? Because as you mentioned, there's a close connection between sovereign debt and bank crises. We don't even know how much banks need to be recapped by.
Yeah, that too. I mean, it's unofficial, but sort of reliable sources say they're looking at something upwards of 100 billion euros as what banks will need. Now, that's less than somewhat market analysts think. It's less also than what the IMF estimated, but it's far more than what they were looking at after the July stress tests, and more also of the figure that was being bandied around just before the weekend.
Alessandro, you know, we have lots of reports coming through that there's a lot of disagreements right now between European leaders, of course. People pointing to Italy and Berlusconi saying you got to get your budget deficit in control before you tap any funds. But then also some are saying there's despair and backbiting in the quarters of power. That includes Sarkozy and Merkel not getting along, and then Cameron butting at Sarkozy this morning.
Yeah, well, you know, the press loves that sort of stuff, and some of it's obviously magnified. There is some antipathy between some of these people, undoubtedly so, but I think it's at times a bit exaggerated because it makes a good story. I think what you mentioned earlier on about Berlusconi, that is important. That's important substantially and economically, because what they really told Italy and Prime Minister Berlusconi was, you really need to pass those measures that we expect you to pass in terms of growth-enhancing structural reforms, and we want you to do that sooner rather than later. In fact,
possibly by next Wednesday.
Okay.
And that, I think, is an important step because it's giving EU surveillance real teeth.
Alessandro, let me ask you this. We have a minute to go. What is ultimately going to happen to Europe? Are they going to get a solution in place, or are we looking at a breakup of the European Union?
No, not of the European Union. I think they'll get a solution in place that will work reasonably well. Oh, my earpiece has just come out. Okay, there we are. For a while. I mean, I think the real problem is that to have a properly functioning monetary union, you also, as economists always keep repeating, need a fiscal union. And the political conditions are just not there for that yet. So we'll see. But I think you know, they'll continue to muddle through for a while.
Alessandro, we're out of time, but thank you so much for sharing your thoughts with us. Alessandro Leipold, the former IMF